What's going on, guys? It's Ricky with TechBit Solutions. So today's video is going to be about what is short selling. So for those that aren't too familiar, especially if you're using like the Robinhood platform or a very basic platform, you guys might be familiar with the term but don't actually know what it is. And if you guys look online, I think they tend to use terms that are pretty, difficult to understand for a lot of people. And I think, this whole market of like trading penny stocks or this whole stock market environment is something that is looked upon as something very foreign or something very just strange and difficult to understand. And I really think it's behind the people that teach it, or those that know it don't really like teach it, and those that do charge a large amount of money. So there's this huge gap of knowledge. So I'm going to talk a little bit about what short selling is. I do want to let you guys know I do have a free group you can join, and it is, the link is provided for you down below. It's TechBit Solutions. We're sitting a little bit over 8,500 members worldwide, so I'd love to be a part of your success. If you'd like to join, again, it's for both beginners and experienced members that pretty much want to network and share best practices. But let me go ahead and get started. So what is short selling? Short selling is when you're betting against the company. So if you guys have watched, The Big Short, one of the main characters, or a majority of the main characters were shorting, the housing market, and what they were shorting against was that they were pretty much betting against the housing market, meaning that they were betting that it was going to go down. And how you can think of this, the easiest way to kind of put it is when we buy a stock, we hope that it appreciates, right? We hope to buy it at $1 and sell it for $2. We hope that we see an increase in value. When you short sell, you hope that it depreciates. So what you usually hope for is, if you buy it at $2, that you sell it at $1. That's really the easiest way to put it. You're pretty much betting against the company, saying that, I'm betting that it's going to go down. There's only a selected amount of brokerage companies that do offer, the short sells, or allow you the capability to, short sell. But what are the risks, right? What you need to understand is that because, when you lose a stock, right, you buy it at $1, the most that you can lose is whatever it is that you have in there, right? So if you have $1,000 at $1 per share, then you have 1,000 shares, and all you can lose, if that share goes from $1 to $0, then you lose, your $1,000. With short selling, since you're betting against the company, if you buy in at $2, there's really no limit on how high the price can go, like theoretically, right? There's it could go to $1 billion, and then you're in a sense, in debt, right? And that's why it's so risky. There's a lot of fees that apply to short selling. There's selected amount of rules, or selected amount of, the longer that you hold it, the more that you have to pay. But that's a little bit getting more into it. I really just wanted to provide kind of just more of a basic and understanding of what short selling is and how you can benefit from it. So what some people do is, since the markets are always changing, right? There's the red days and the green days. What you can do with, penny stocks, or what people have done within our group as well, is usually, let's say, we're trading, JNUG. JNUG trading from $6.80, that's the support, and then $7 the resistance, right? We make that quick profit from 40-cent profit, right? We buy low, sell high. Now there's a lot of short sellers that are within our group, and what they simply do is they buy at that $7 mark because they know that's a resistance, meaning that's usually where it peaks out at, and then it begins to drop. So not only do they get to ride it from the $6.60 to the $7, but now they get a profit off of from the $7 back to the $6.60, because $6.60 is the support. So now you can in a sense benefit from both sides of the rise and the drop. And it's just a different way of looking at it. It is, again, a lot riskier, and although it might be easier, since a lot of the stocks that we do trade have a good amount of red days, right, and we usually just try to catch them at the bounce. I would really suggest, before jumping into short selling, that you do your own homework, and really understand kind of everything that can go wrong with short selling, or just understanding your risk, right? I want to make sure that you guys are educated enough that you don't just jump in and hope for the best, because it's not like penny stocks. You can't just lose the amount that you have in your account. You can lose a lot more, and I'd hate for any of you guys to be in debt, especially, and get discouraged when it comes to trading in the stock market. So if you guys have any questions or any suggestions, please go ahead and let me know. And if you guys would like me to elaborate a little bit more on what short selling is, I'd love to do it. Just let me know on what it is that you want me to kind of talk about. But thank you guys again. The links are provided for you down below if you guys would like to be a part of my group. And if you guys can like this video and subscribe, we'd greatly appreciate it. Hope you guys have an amazing week, and let's make sure that we end this year on a green note. Take care, guys.
Baby, don't you let it go to waste. You know we could put in all the shit.